Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every single time that the market tested this zone in the past, it got rejected to the upside quite aggressively, apart from this only time where it dropped below, but then immediately broke back above, retested and rejected to the upside. And at the moment, we can see how the market is still rejecting to the upside this exact same level. So it is still in the process of rejecting it to the upside. So more bullish price action could be expected, as already happened in the past when the market was testing this exact same zone. That is definitely possible. Dropping down on the weekly time frame, what we can see. Now, from a weekly perspective, the situation is quite clear. We have a quite textbook uptrend here from a weekly standpoint. We have a market which has been creating a series of higher highs and higher lows. Now, every time the market has gone and tested exactly the previous high, which is what you want to see in an ideal uptrend. In an ideal uptrend, you want to see a series of higher highs and higher lows, where every time the higher high, after the higher high, the market goes and retraces to the previous high and creates a higher low. And so far, that is exactly what has been happening with all these higher lows. Now we have the possibility of creating yet another higher low and then a new higher high. So essentially continuing this uptrend from a weekly standpoint. We can also notice that if we look at what kind of structure the market has here from a weekly standpoint, the market is currently testing the previous resistance turn support, but also has an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 Fibonacci retracement lining up perfectly with this previous resistance turn support, creating a confluence of support at this area. And when you have a confluence of support zone, you have an increased probability of seeing institutional longing instead of this zone, which would further increase the probabilities of a potential rejection to the upside away from this area. If we drop down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that clearly the market is testing confluence of support and rejecting it to the upside. I also spoke about this potential test and rejection in my previous analysis, which, by the way, you find linked in the description, so you can go and check it out for more free education. And now that is exactly what the market did. The market tested its zone as we wanted to see and is currently rejecting it to the upside. Now, in a situation like this, what kind of structure the market is creating? Well, before we dig deeper, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, first of all, if we are looking at the data for the GBP, we have to keep in mind that we are already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been increasing, meaning that institutions have been moving back to the bullish side for GBPUSD, therefore longing it and making it stronger. We can see, in fact, how with the last report alone, institutions have added 8,600 longs and closed 9,500 shorts. So clearly institutions are currently moving back to the bullish side for GBPUSD, making it stronger, with a current positioning of 160k longs compared to only 52k shorts from an institutional perspective. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. So from a daily standpoint, we have to identify the structure. And it is clear that the previous high is here. This is the previous resistance from which this move to the downside was created, which, if the market will manage to break it to the upside, would essentially signal a shift back from a bearish structure from a daily standpoint to a bullish structure. So if the market here will break above the zone, that is where things would become interesting again, because after the break, on the retest of the previous resistance turn support, that is where there is good probability of seeing even more institutional longing, because we already have seen some longing, and at that point that would further increase the probabilities of a potential rejection to the upside away from this zone. So if we do get the break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included, all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.